Get Rich Slow with John Wolf. Hey, I want you to like, share, and subscribe to this video. And today I'm going to give you the introductory masterclass on government loan basics. So that is 3 loans in particular. I'm talking about the USDA, I'm talking about the FHA, and I'm talking about the VA loans. And I'm also going to tell you what it feels like to get these loans done as a loan officer, sort of also, anthropomorphize, who the loan is. So, USDA loans are really designed to help people get into their first home ownership in the country. And getting one of these loans done feels like you're doing something complicated with the DMV. It really does. Everything takes too long. It's all hard. It's all complicated. But here's the cool piece. It's 0 down. It has a very low mortgage insurance rate. It has a relatively low fee, and it has a pretty low interest rate. That's the good. The bad is it's pretty hard to qualify. Why do I say that? Well, you can't get a loan for that in Portland. You actually have to drive a long ways out of Portland for the area to qualify for USDA loan. Then the home itself has to be a modest home. It's not allowed to have things like pools. And it has to also have a permanent road that's paved to go all the way to it, which doesn't always exist in the areas where the home loan is allowed. Then it has the lowest maximum income cap, and it has the lowest debt to income ratio requirement. So between those two numbers, there's a very narrow band of people and houses that can even do the program. Now they increase that income cap per kid, but it's still a pretty low number. If you want to be shopping in like the $300,000 to $400,000 range, you have to have very little other debt, and you have to be near the cap of that income. So it's really tough, at least in the Portland area, to qualify for that at all. Now, the next one is the FHA loan, and that one is sort of the starter loan for people in the city. And the positives of that one are you can have a more recent bankruptcy, even a more recent foreclosure. It takes a much lower credit score. The minimum is 550. There is an upfront mortgage insurance and monthly mortgage insurance. And that monthly mortgage insurance, relative to a conventional, it's high if you have really good credit, and it's low if you don't have so good credit. So it's a decent deal on the monthly. Now, the person is just like, I'm just going to get this loan done person. It's really easy to do the whole program, but they have a lot of really strict rules that are kind of weird, but they're relatively routine, so it's not hard to do. So it's almost the most basic entry-level loan. It's easier to do a conventional, but you have to have somebody who has better income assets credit to even do it. So for 3.5% down, getting into a home, becoming a homeowner, and then maybe refinancing to a better loan in 5 to 10 years, or even just finishing the payments or selling and moving on to your next home, it is a great first option. There is no income restriction. And like I said, the minimum credit score is just 550. At that credit score, you have to put 10% down, but if you can just get to a 580, it's 3.5% down. And at that point, it doesn't matter if you put more money down. It doesn't change the rate or the mortgage insurance or anything else. Now, the last one is the VA loan, and this is for our honored veterans. So you have to have either served honorably, currently be serving honorably within certain rules, and or be the spouse of someone who served honorably, or if you're receiving a pension. That's kind of a complicated subject. Hopefully it's not, because that means that one of your family members died in our service. But here's the cool thing with the VA loan. Absolutely allows the people with the lowest credit score. You're absolutely allowed to have the highest debt to income ratio. It's a very good interest rate, and there is no monthly mortgage insurance. Now, there is an upfront mortgage insurance if you're not considered disabled by the VA. I have people ask me all the time, does this or that count? It doesn't matter if I think you're disabled. It's if the VA thinks you're disabled. And if I had to give a persona to a VA loan, I'd have to say it's like an Old Testament God. It loves its people. It wants to say yes to your loan. It makes it as easy as possible, but it has many, 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 many rules and absolutely no mercy. And as far as credit score goes, there's actually not a minimum credit score to do a VA loan, but it's much, much easier to do a VA loan. They make you look at a lot less of those rules if your credit score is over 620. Well, hey, here's my landing page as a loan officer, so you can look up my phone number and my license. Please like, share, and subscribe, and let me know what you want to know about. Now, I'll be doing more videos on the specifics for people wanting to do get rich slow, wanting to invest and own multiple properties. And I got to tell you, the FHA loan and the VA loan have some often overlooked superpowers that you should take advantage of if you can and if you want to. Have an awesome day. Bye.